Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for a very important lead-in unto Friday. And today is Thursday, and we are at December 1st. It's hard to believe we're at December 1st, 2022, 6:05 p.m. Central Time. Now, before I get into the whole spiel that I'm going to give you as to what's going on, I do have to remind you that our Cyber Week sale, it's still going on. You can take advantage of it. I have given the go-ahead to raise prices on my courses. So I have my IT people, they're there. They're going to program this all in. The courses are all going to go up by about 33%. They vary a little bit, but that's a big jump any way you want to cut it. But I have expenses, new charting software for all this, the course itself, all the services that produce all this. So it's time. And I've held the line on it, but I can't do it anymore. So you get any one of these three courses for free with any 1-year subscription or an upgrade to subscriptions on my research. I think you'll find it, number one, fun. Number two, informative. Number three, I really put my heart and soul into this and try to give you trade ideas from spiders, ETFs, stocks, and the futures markets, depending on what you're doing. And I think you'll find it interesting, real interesting. Bollinger Band course, you know how important I think that is. Major importance. So we'll see what goes on here. Interesting when I talk about that, because I got a tweet from John Bollinger that said, watch out, the VIX he thinks is about to crash. And it's under the 20 level, 1984. So he's onto something there, but you know, he's the guy that created it. He should know what he's talking about. I just follow what I teach on it. And it's a lot more than what he had taught me. And that's the whole idea. As a teacher, I want to say that I'll bring forth courses and everything. Do not commit to just what I do. Make it better. That's what it's about. That's how I became a broker and an analyst in the market. I was taught, and then I tried to make it better, put my own spin on things. I failed along the way, and I succeeded along the way. That's what it's about. Nobody has the answer. We try to do the best we can. So now let's talk about tomorrow. You saw the craziness today. At one point, we were down 400 points in the Dow during the day. Then the market came up. Did it overdo itself yesterday? For sure. Because the market's anticipating that the Fed is in a pivot. I don't think that's what Fed Chair Powell said, but he didn't push back. Nobody asked him yesterday, as you're talking, Mr. Chair, the stock market's taken off again, and he could have come back with an answer. That didn't happen. And the market, as you know, was up the day before 700 points. Today it was down about 200 and some odd points. It's all leading up to the morning when we get the all-important jobs report. Now, we are seeing wobbles. I'm going to use that term, not gobbles, wobbles in the market. If you saw the unemployment claims today, they fell actually on the weekly, but they went up on the continuing. If you're looking at the PCE and the other numbers that came in, yeah, they came down, but so small. And that's the problem that the Fed, I think, is concerned about, that we get sticky on some of these numbers. And as some people point out, well, that's a September number. It doesn't matter that it's a September number. It's a number, and it's one of their favorite numbers. And it doesn't matter what's going on. I mean, we could argue then with each other. Copper prices since September have gone up. Silver has gone up. Energies are probably close to where they were. You know, I can go into those arguments with you on the commodity side. Then we can talk about how the economy's been doing. The key is, the Fed is data dependent. They're going to look at this jobs number, and it in its own way cements part of what's going to happen December 14th. And just before we get that Fed decision, we get CPI numbers. So this is an important time. And yes, I think we're all agreeing that we're looking or may have seen already the tops in this, but how fast does it fall? Because the Fed's not going to stop raising rates. They're going to keep going, and that's what people missed yesterday. Whether they're going at 50 or 25-point increments, where does it end? The Fed chair said he doesn't know. Believe him. He doesn't know. You could be 5 1/4, 5 1/2, 5 3/4. You think that's going to be good for the stock market? If you do, You're then the guy that says, okay, the market can live through that, the corporate earnings, that they'll survive, and the market will go up in 2023. I'm not disagreeing. What am I saying? From what level? What level? Are we going back to those lows? Are we never going to visit them again? You think that you're going up in rates and you're just going to keep going up indefinitely here? Then you know something nobody else does. That's the dilemma. But it's timing. The month of December is a strong historical month for stocks. The question is, do we get a break from these levels to come in on to catch that? Or does the market just here grind higher? That is where you're at for December. I think come the first quarter of 2023, if these numbers look strong being you don't break enough in the jobs and the CPI stays strong, that's not a good thing for the stock market. It means the Fed's going longer. Break it, you probably still go down in the first part of the year, first quarter, but then where's the landing pad? You see what I'm getting at? This is all real important stuff. Now, we have a big OPEC meeting this weekend. What's OPEC going to do? They have a decision to make. The European Commission looks like they've reached a deal with the European Union, $60 a barrel, with a mechanism that looks to see where the market's at and it can adjust prices within it. Russia's going to hate that. So when does Russia shut off the oil to those countries if this passes? It takes 27 nations to do it. I don't know that they've yet voted on that, but I know what the commission has come up with, and that's where you're going to be at for that. So there's a lot of things going on in this market that OPEC has also got to deal with. When we look at the weekly chart, we've been through so much, and I feel like I've been through the ringer this week. You're not even up 1 percentage point for the week. Do you feel like that's the case? I don't. I feel like it's been a lot more. And what the market's been trying to do is do its darn best, because it's been stuck here in that sideways action, to hold on and keep something going. The pattern is one of higher lows, higher highs. The support, and we had a crossover. Let's review this. I want you to look at the 18-day average of closes versus the 100 and look at where prices are. I'm looking here, is the market going to break to the upside, break out, and will we get a crossover of those? This was on Tuesday. Here's the next day. This is yesterday's action. Now we have the crossover. If you get the crossover, in theory, will the market follow through it all? Because that's what you're looking for. One big element to me, you're fighting now, and this is the close of business on Wednesday, you're fighting at the 200-day average. So what the market did is on a break this morning, and you saw all the stock indices broke, the market came back to challenge that 200. It's still going to be a big resistance zone for the market. And now it's got to figure out, what does it do next? Why? Because right above it, you've got the Bollinger Band. Do I think you're just going to easily run through all this? I would normally say no, but this market's supercharged with traders trying to be the first ones in, thinking, we're just going to keep running. I'm going to look back at it regardless. I'll stick my neck out. This is a big resistance area. I think professional money won't be buying. I think they're coming out of the market in that zone. And I say that looking at this market right here in the slow stochastics. This is so important. If you look at the slow stochastic readings, let's go back just a little bit here, another day. You lost the reading. You had a 76. It had been embedded. You come back, you grab back to it. The only day you can re-embed, the day after you lose it. And remember, my numbers will not look the same as yours unless you're one of my subscribers. Then I will send you the formula that you use. It's not the simple 5, 3, 14, 18, those numbers. It's inside of it. And you can write your own in many of the services, or they'll let you go in and make the change. It's a simple change, and then you'll be right with where I'm at. So as I look at it, you're re-embedded. That means, in theory at least, you should make a run for the Bollinger Band. You're trying, don't you agree? You got as high as 41.10 today, a higher high than yesterday. You're knocking on the door of it. It's a resistance point, though. It's not a breakout point. It's resistance. Please understand what you've got in front of you. You don't have that in the NASDAQ. You're in an overbought market that is fighting the battle from the first time it hit the 100-day average in green and the Bollinger Band. While it fell back, now it's back into another resistance area. A lot of resistance being seen in these markets. When we get to the December micro Dow, you lost the reading and you got it back. Now, it's trying to lose it again tonight. If it's lost, what does the market normally do? It reverts back to the 18-day average of closes. I want to see that happen. My ideal thing is that we break now. It'll set up another buy for the Santa Claus rally. That's what I'm hoping. Do I think we'll get it? I can share this with you. I have none of my subscribers via my recommendations in this market. So you know that I'm just sitting here and looking at it very fair-minded. But I don't like going through these major reports, these events. The markets move like that. The stops get hit in weird ways. I don't want any part of it. What are we in the Russell? Void of trends. You have a lower low, higher high. You're trading very much sideways. Haven't quite made it back to the upper Bollinger Band, but that stopped the market with the combination of the 200-day average. Now you cleared the 200, which means it's support on the break, but it's not in a trend. So I can see the support all the way from the 200, the 18, back to the 100, but I don't have a trend to latch onto. Why do I want to be involved? In the VIX, as I said, we're getting comments from the master of it, John Bollinger, put out his update last night, watch out below. And today he's getting what he wants. The market re-embedded. It's got its embedded reading. Until it loses it, that means the stock market's friendly. So I can see that. We're also back to numbers that if you think about it, you're going back into the summer numbers when you were down here. And that's when the market came off. Remember that 3,600 level in some of the indexes? And then we rallied back up and over that towards the 4,000 level, back and forth. Santa Claus rally time, maybe. That's what the market is saying. Now we get to the bonds and the notes. They have maintained first in the bonds the bullishness of the enhanced Bollinger Band. Do you not believe when I say when you have that, the pros are buying and the market's moving up? But I don't get blind. This 130.24 area starts a big resistance point. Nothing's going to grow to the sky, but traders are saying, okay, if this jobs data is great news that we're seeing the weakness, we've seen the worst. But what does the worst mean? Does it mean that you're going to fall back on some of these rates to 4%? I have my doubts. That's all I'm saying. As a chartist on the 10-year, I look very hard at what's happening right here. And with the embedded reading, even that, what would I tell clients? The first hit of that, you take money off the table. So if you've decided to ride it through with that, that's what you do. In the dollar, what do you think I'll be telling traders on this break right now? This is where you're looking to take money off the table. First challenge of the 200-day average. We haven't hit that in a period, okay? And now you're hitting it? No. You might get to the Bollinger Band, but this is where the short covering should begin in the market. Eurocurrency. The challenge of the 200-day 4 days ago was where pros started taking money off. I haven't changed my opinion. I think they'll take off more money between here and the upper band, and that doesn't mean I'm bearish. Getting out of longs is not the same as being bearish. You're not committed to always be in a market. That is what people don't get. You wait for opportunities. Throw the name off the chart is the smartest thing you can do. You heard me, the smartest. Trade the pattern, not what you think of that market. In the British pound, you went up to the Bollinger Band and the 200-day average. You own it. I don't want my client to own it now. Now we wait for our opportunities on pullbacks. Get me through tomorrow, and I'm going to be very aggressive in the markets if the report doesn't go and set the market crazy. Bitcoin. Look at how the Bollinger Bands are taking all the, if you will, volatility out of the market. When a market starts going this narrow, it means you're losing volatility. That's what happened back here. And that's what's going on. If you watched yesterday's interview, come on. This whole industry's been dealt a major setback. I've seen this before in my career of trading in the futures when the CFTC came after early futures brokerage firms. Remember, I've been at this since the 60s. So I saw these crackdowns. I see the firms go out of business. I see the shakeouts that happen. It is natural. You think it didn't happen in the stock market from the 20s and the 30s on? That's the bigger market that went through it. So as regulation comes in to protect people and clean the markets up, and yes, clean them up, those are the things I'm always looking at. I don't know why we just got a blue screen behind us, but we did. Let me come back to the charts here. There we go. I don't know what just happened there. But regardless, so we look at that. Then we come to the energies. How do you take the gamble on this in front of OPEC? Which way are they going to go with all this? Which way is Russia going to go with all that they've got? The chart action temporarily has been bearish. I don't know why we're getting that, folks. I wish I could tell you. We'll restart the computer for the very next video, and we shouldn't have that problem. Something went on. But to sum it up, I think you're best off out of the energies until Monday. Let's see what OPEC does or doesn't do, and then we take another fresh look at these markets. A lot of reports, a lot of danger. I know you're going to tell me it's opportunity. I'll live for the opportunities when I have to gamble what the report is, what the reaction's going to be, and I can't protect myself because the market might go crazy. I'm Ira. Again, anytime you want, just give a click up here. You can get to our research, subscribe for the year, pick your chart course. I'll see you over the weekend.